India's key export sectors are staring at a crisis after U.S. President Donald Trump hiked tariffs on Indian goods. On Wednesday, Trump announced an additional 25% tariff on Indian imports, taking the total duty to a massive 50%. The move is a direct penalty for India's continued purchase of Russian oil. The new tariff doesn't apply to other major Russian oil buyers like China and Turkey. Only India has been singled out. Industry experts say the sectors hit hardest include leather, chemicals, footwear, gems and jewellery, textiles, and shrimp. These industries contribute billions to India's export economy and are heavily dependent on the U.S. market. The 25% tariffs, announced on July 31st, kicks in from August 7th, 9:30 a.m. IST, while the additional 25% will be applied from August 27th. These are on top of the existing import duties already in place in the U.S. In 2024-25, India-US bilateral trade stood at $131.8 billion, with India exporting $86.5 billion worth of goods to the U.S. Here's how the new duties break down. Organic chemicals will face a 54% total duty. Knitted apparel, 63.9%. Woven apparel, 60.3%. Textiles and made-ups, 59%. Diamonds, gold, and jewellery, 52.1%. Carpets, 52.9%. Machinery and mechanical appliances, 51.3%. Furniture and bedding, 52.3%. In terms of value, textile, $10.3 billion. Gems and jewellery, $12 billion. Shrimp, $2.24 billion. Leather and footwear, $1.18 billion. Chemicals, $2.34 billion. Machinery, nearly $9 billion. Shrimp exporters, in particular, are in deep trouble. Indian shrimp already faces 2.49% anti-dumping and 5.77% countervailing duties in the U.S. The new tariff pushes that total to 33.26%, starting August 7th. In contrast, Ecuador pays only a 15% tariff, giving it a sharp competitive edge. The textile and apparel industry is also sounding the alarm. The U.S. is India's largest buyer in this segment. Exporters say the new tariffs have come at the worst possible time. The message from Washington is clear. Trade ties will come at a cost if India doesn't align with U.S. geopolitical expectations. For now, Indian exporters are bracing for impact and scrambling to remain competitive in a market that just got a lot more expensive.